Consumers are about to pump $2.5 trillion into the economy, and it could mean booming stock prices. In this video, I'll show you exactly what to look for in reopening stocks and the stocks to watch. I'll then reveal 3 stocks to buy in March that could jump as the recovery takes hold. We're talking best stocks for March 2021 today on Let's Talk Money. Hey Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel. I want to send a special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Nation, the reopening is here, and while a lot of those travel and tourism stocks are already up 20 and 30%, I just found data that could send them up even higher. The recent personal income report by the Federal Reserve showed the household savings rate at 20%. That's the highest since World War II and already up from a multi-decade high over the last year. This chart shows American households are sitting on over $15.3 trillion, up $2.2 trillion from the year prior. And this data, that was back in the third quarter of last year, before a booming stock market, before another $900 billion in stimulus, and before the current $1.9 trillion stimulus. We could be looking at upwards of $2.5 trillion in extra household savings. On a $22 trillion economy, that's like an 11% boost to growth. And if you're like me, you're itching to get out and spend it. Now, this money could flow through to a very specific set of companies. So in this video, I want to outline exactly which industries and which stocks I'm watching for that reopening trend. I'll show you the actual web searches that point to record sales and then reveal 3 stocks that I'm buying in March. I'm putting all 3 of these stocks into our 2021 Bowtie Nation portfolio. That portfolio on Stockcard.io has jumped over the last few months, up 29% and beating the market by 22% over that period. Now, some of these have jumped higher, a return of 138% in Diamondback Energy, 61% in shares of Citigroup, and 42% in ride-sharing Lyft. Now, I'm not going to do a portfolio review this month because I want to get to those March stock picks. I'll do a full update on all the stocks in the portfolio next month, so be sure to click through that link in the description below, look for the Bowtie Nation portfolio on Stockcard, and click the bell icon to get notified whenever I buy or sell a stock from the portfolio. And as a special bonus, I've negotiated an exclusive discount for everyone out there in the community. Use the promo code BowtieNation, all one word in lowercase, for an exclusive discount beyond the free trial. Now, of course, in this reopening theme, the big question is going to be timing. Now, how long does it take for people to get out and spend that money? How long does it take to reach that herd immunity where the virus dies out? And on that, I think we're further along than the medical experts want to admit. We now have 3 vaccines approved between Pfizer, Moderna, and Johnson & Johnson, and it's going into the arms of over 2 million Americans every single day. In fact, more than 15% of the population has already received at least 1 dose, and studies show that the first shot protects people up to 74% from getting COVID. There have been over 30 million reported cases, but doctors estimate that actually at least 100 million have had the virus, many of which didn't have symptoms or maybe thought it was just the flu and didn't get tested. Now, for just some quick back-of-the-envelope math there, that's about 30% of the population already infected and with some level of immunity. Then you've got 15% with at least 1 dose of the vaccine. Another 2 million doses through March is another 15% of the population. So add this all together, that's nearly 2/3 of the population immunized and very close to that herd immunity that we need. Now, the medical experts don't want to start talking about this because they're worried that people are going to start going out early. But that reopening, that's going to be in full gear by April. That means a big chunk of that $2.5 trillion in additional savings could show up in second quarter earnings for companies, and I want to be ready for it. So first, I'm going to highlight the industries and sectors that I'm looking at for this theme, show you the data behind the companies that could benefit. I'll show you which reopening stocks I'm avoiding, and then reveal the 3 that I'm adding to the portfolio this month. The idea here is that while consumers have continued to buy those household goods and the tech gadgets through the pandemic, they've missed out on those experiences and the services. Now, there's this huge pent-up demand that gets unlocked, and with more zeros in their savings account, I think people reach for those higher ticket experiences as well. This is going to include industries like theater operators, hotel, gaming and resorts, restaurants, travel services, sporting events, and even outdoor retailers. Now, you'll notice that 2 of the most popular reopening stock groups aren't on that list: airlines and cruise operators. Now, for cruises, while the CDC is set to release permitting requirements any day now that's going to give them a timeline for when these can resume, I think it's further out than a lot of these other themes. And cruise ships are walking petri dishes, and you won't see cruising again until at least later in the year. Shares of the big three cruise operators have run up an average of 60% in the last 6 months, and enormous debt loads are going to weigh on these for years to come. For the airlines, this one almost got an honorable mention because we have seen some promising signs. Now, Southwest Airlines, ticker LUV, got 26 million web visitors in January, 62% than any of the major carriers. Passengers through TSA checkpoints crossed over 1 million on February 25th, a number that had only previously been reached on holidays over the last year, so travelers are returning to the airports. Now, I do believe that Southwest could outperform the other airlines on its domestic route focus, and besides the fact that it's the most efficient of the major carriers. The problem is, though, besides that shares of airlines have already jumped, business travel and international is a big chunk of profits, and that's still not looking so great. International is about 15% of carrier revenue and was still down 80% year over year at the end of 2020. So I'm going to be avoiding the obvious and the most popular stocks to pick up ones that might have more to benefit and further to run. First on our stocks to buy list is Dick's Sporting Goods, ticker DKS, and while shares have doubled over the last year, I think they continue to rise from here. According to data analytics by SimilarWeb that tracks web searches, the top trending getaway searches over the last month have been Yellowstone National Park, Disney World, Disneyland, Universal Studios, and Grand Canyon. People are looking for safe, remote ways to get out, and I think that trend continues through the summer. Same-store sales increased 23% in the last quarter, and online sales nearly doubled. Q4 earnings, which are expected before the market opens tomorrow, are expected 70% higher on a year-over-year basis. The company has a really strong balance sheet here and upped its share repurchase program last year along with the dividend. Now, despite that solid share performance, it's still only trading at 18 times on a price-to-earnings basis and 0.73 times sales. Now, earnings are out tomorrow, which could make the shares more volatile, so maybe invest half now and half later to see what management says about 2021. The next stock I'm buying this month is Cinemark Holdings, ticker CNK, the third largest theater operator in the US with 4,500 screens. Now, of course, Cinemark isn't the Reddit favorite like its competitor AMC Entertainment. Shares of the Texas-based company are up just 36% so far this year, just a fraction of that 315% run in AMC after investors targeted it for a short squeeze. Cinemark is clearly the better company, though, with net balance sheet debt of just $3.4 billion versus $10.9 billion in debt on AMC's books. Now, Cinemark is expected to narrow its loss this year to $2.94 a share from a savage loss of $5.24 per share in the last year, and on revenue that could nearly triple to $1.6 billion. 2022 revenue is expected back up to $2.9 billion, and I think theaters see surprise numbers this year. Hollywood studios have been sitting on their best movies for more than a year. Summer blockbusters are going to be huge, and everyone is going to be back in the movies. Another stock I think could surprise higher here is Madison Square Garden Sports, ticker MSGS, the $4.8 billion operator of the Event Center in New York. Besides the marquee Event Center, the company also owns the New York Knicks, the Rangers hockey team, 2 development leagues teams, and an esports franchise. And this one is our value play on the list, still trading 6% below its pre-pandemic high and some solid growth prospects for this year. The NBA regular season started late February, and the Garden already has some events planned. For this coming quarter, the company is expected to report $1.29 in earnings per share versus a loss of $1.69 a share in the last quarter, which would be a big turnaround. Revenue for the next 4 quarters is expected to rebound to $548 million, and then to 32% higher to $724 million in the next year. Click on the video to the right for the 5 streaming stocks to buy right now. 5 stocks to take advantage of that streaming video theme. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.